Every company needs a plan to succeed, and Virgin Galactic is no exception, so sit tight as we take you through SPCE's success roadmap. But before we do that, subscribe to our channel, $1 World, for regular stock market updates. Virgin Galactic, which began its journey in 2017 and went public through a special purpose acquisition company or SPAC deal in 2019, achieved a significant milestone when its founder, Sir Richard Branson, ventured into space in 2021. Now, in June 2023, the company has commenced regular commercial space flights, keeping a consistent stream of noteworthy developments every few years. However, what's top of mind for investors is when Virgin Galactic will announce its inaugural profitable quarter. A few months ago, in an analysis of Virgin Galactic's financial situation, it became evident that the company faced a considerable challenge. Virgin Galactic was shelling out a whopping $125 million in operating costs every quarter, while its revenue was significantly lagging behind. Recent reports even indicated that the company expected a meager $1 million in revenue for each of the next 2 quarters. The fundamental equation of profit being revenue minus cost made it unequivocally clear that Virgin Galactic would not be turning a profit before the year's end. The pressing question on everyone's minds remained: when would Virgin Galactic finally achieve profitability? Through an examination of the number of space lines Virgin Galactic needed to manufacture and the frequency at which they needed to be flown each quarter to offset the $125 million in costs with equal revenue, the conclusion was inescapable. There was no viable path for Virgin Galactic to reach profitability before 2026, which coincided with the planned introduction of its new class of Delta spaceplanes, essentially doubling the size of its space fleet. However, looking beyond 2026, the calculations indicated a glimmer of hope. Virgin Galactic might stand a chance at profitability if it could successfully assemble a fleet of 8 spaceplanes, operating them at a rate of 1 flight per week, equating to 100 total flights per quarter, while also managing to secure a minimum of $1.25 million in ticket revenue for each flight. Remarkably, it appeared that Virgin Galactic's own strategic outlook aligned with this assessment. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. In a recent conversation with Ars Technica's senior space editor Eric Berger, Virgin Galactic president Mike Moses offered a glimpse into the company's future plans, placing a particular emphasis on their upcoming Delta-class spaceplanes. Here are the takeaways from their interview. Virgin Galactic's next flight is scheduled for September 8th, but it will differ from previous missions as it will carry only 3 paying passengers. This marks a shift from the original design of VSS Unity, which could accommodate 6 passengers. Consequently, this flight is anticipated to generate only half the revenue initially expected, contributing to projections of reduced earnings in the upcoming quarter. VSS Unity, which took its inaugural flight in 2016, was engineered with the capability to perform between 500 and 1,000 flights or operate for up to a decade before retirement. Depending on whether it reaches the flight threshold or the time limit first, this spaceplane might potentially be ready for retirement around 2026. In contrast to the construction of VSS Unity, which was a layer-by-layer process akin to building a Lego Star Destroyer, the Delta-class spaceships will be manufactured and assembled in 3 distinct modules: the forward fuselage, the aft wing, and the innovative feather re-entry system. Virgin Galactic holds ambitious plans for its Delta-class spaceships, with aspirations to have a couple dozen of them in its fleet eventually. In the near term, the first Delta-class spaceplane is anticipated to be prepared for flight testing by late 2025, with commercial service expected to commence in 2026. The disposable engines for the Delta-class spaceships are currently produced at a rate of 20 per month, permitting a maximum of 60 total flights per quarter. Achieving the target of 100 flights per quarter will necessitate an expansion of the product line. To reach this goal of 100 flights per quarter, Virgin Galactic will require not only additional Delta-class spaceships but also a second mothership. Estimates suggest that between 4 and 8 Delta-class spaceplanes will be necessary. Remarkably, this aligns with the same number previously calculated to achieve break-even profitability. These insights from the interview provide a comprehensive overview of Virgin Galactic's strategic vision and timeline for future operations. They offer valuable information to investors and space enthusiasts alike, who are closely following the company's journey in the dynamic realm of space tourism. Analysts surveyed by S&P Global Market Intelligence are currently projecting that Virgin Galactic will transition from losses to profitability in 2027, with steady growth profit in the following years. However, your assessment, which closely aligns with Virgin Galactic's official estimates, challenges the consensus opinion, suggesting a more skeptical outlook regarding the company's financial prospects. Assuming the commencement of flights for the first Delta-class spaceplane in 2026 with a weekly flight schedule accommodating 6 passengers paying a combined ticket price of $1.5 million, the estimated revenue for that year would amount to $78 million. Regrettably, this falls short of covering the $125 million in operating costs, and the situation could worsen if passenger numbers or ticket prices don't meet expectations. Moving ahead to 2027, the possibility of profitability arises if Virgin Galactic manages to increase passenger numbers, charge the recently raised ticket price of $450,000, and introduce a second or third Delta-class spaceplane into service. However, this optimistic scenario is contingent on several variables aligning perfectly, factors such as lower passenger counts per flight, reduced flight frequency, passengers opting for the $250,000 ticket price, or delays in deploying additional spaceplanes can all disrupt the projected timeline and hinder Virgin Galactic's profitability in 2027. Even in the best-case scenario, the expenses associated with building extra motherships and 4 to 8 new spaceplanes, each with a price tag of $50 billion to $60 million, must be factored into the equation. These added costs would further postpone the timeline for achieving profitability. In summary, while Virgin Galactic may ultimately achieve profitability, your analysis suggests that it may not materialize in 2026, 2027, or even 2028. The complexities and uncertainties surrounding the space tourism industry make it a challenging endeavor, and caution is warranted when considering the timeline for Virgin Galactic's financial turnaround. Let's take a look at how SPCE stock is performing in the market. SPCE stock is currently trading at $2.58 per share, showing a 2.8% increase from the previous day's closing price. The company has a market capitalization of $947.21 million, with today's trading volume reaching 8,449,977 shares. Over the past year, the stock has ranged from a high of $6.61 to a low of $2.46. It opened at $2.55 today and closed at $2.52 yesterday. SPCE operates in the emerging space tourism sector and is still in its developmental stages. While it has yet to achieve profitability, it has been making notable strides. In July 2023, SPCE marked a significant milestone with its 4th successful commercial spaceflight, with plans for more launches in the pipeline. Investing in SPCE stock carries inherent risks. The company faces competition from other players in the space tourism arena and remains in the early phases of its growth. However, SPCE stock holds the potential to establish itself as a leading force in the space tourism industry. Prospective investors should carefully weigh these risks and potential rewards. Additional factors to consider when evaluating SPCE stock include the company's financial performance, which, despite not reaching profitability, has demonstrated positive cash flow from operations. SPCE benefits from a capable management team with aerospace industry expertise and operates in a competitive landscape, alongside rivals like Blue Origin and SpaceX. Moreover, the stock's performance could be influenced by broader market conditions given the inherent volatility of the stock market. Online stakeholders and Twitter users have been expressing predominantly positive sentiments regarding SPCE's Virgin Galactic Holdings Incorporated stock's future, creating a prevailing bullish sentiment among the majority. Many believe that SPCE's stock holds the potential for an upward trajectory in its value. However, it's important to acknowledge that not all voices are aligned with this optimism. There are individuals who maintain a contrary viewpoint, arguing that SPCE's stock value may lack the necessary potential for substantial growth and instead could see a decline in its value. This divergence in opinions underscores the inherent volatility and unpredictability of stock markets, where a multitude of factors and varying perspectives can significantly influence market sentiment and trading decisions. As investors navigate this landscape, they must consider a range of factors and undertake comprehensive research to make informed choices about SPCE's stock's future performance. Remember that this is not financial advice, and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think the stock will make you rich or not in the comments section. Hit like and subscribe to our channel, $1 World, for more such penny stock videos, and we will see you in the next one.